Lanice, a headline in the New York Post this afternoon described Wall Street as Ball Street. That's B-A-W-L. The crisis started to unfold when Lehman Brothers filed the largest bankruptcy in American history. And keep in mind, the investment bank predates the Civil War and made it through the Great Depression. Merrill Lynch was next, selling itself to Bank of America. Then American International Group, or AIG, sent an SOS using an emergency loan to stay above water. The company's stock dropped nearly 60% and almost $20 billion was wiped off its balance sheet. When the markets closed today, the Dow was down more than 500 points, its steepest drop since the day the stock market reopened after the attacks on 9/11. About $700 billion evaporated from retirement plans, government pension funds, and other investment portfolios. Despite the trouble, Treasury Secretary Henry Paulson says the American people can remain confident in the nation's financial system. But Paulson says regulatory changes are needed to deal with this new economy.
In the intermediate and longer term, clearly we're going to need major regulatory changes, and I've spoken a lot about that. And we could use additional authorities to deal with non-bank financial institutions.
You may remember two mortgage giants, Freddie Mac and Fannie Mae, were recently taken over by the federal government. But tonight, the Bush administration is letting it be known that future government rescues are not in the cards. Bob.